We have Preferred Trust with us today, one of the custodians we closely work with. And with that, we have Christina Trimbley. She is the Director of Operations with PTC. And so she's going to start by going over the importance of self-directed IRAs, the benefits, and then at the end, I'll come in, talk a little bit about benefits of investing in real estate and talk about Connect Invest. And with that, we'll have Chris come on.
Okay. Ready? Good morning. Thanks for everyone for joining us. I want to thank Mason and Connect Invest for inviting Preferred Trust Company to be a part of the webinar today. So we are going to talk about self-directed IRAs. I'm from Preferred Trust Company. We are a licensed and regulated trust company. Let me get my slides going here. There we go. So many of you have probably had some experience with retirement accounts at some point in your life. Maybe it is a former employer account like a 401k, maybe a current employer, maybe an IRA, or possibly a pension plan, something from military benefits, teachers' benefits. But we've all heard of retirement accounts before. And our most active association with retirement accounts is usually publicly traded assets, right? Stocks, bonds, mutual funds. You typically think of big box custodians like Charles Schwab, TD Ameritrade, Edward Jones. Those are the terms we're most familiar with when it comes to retirement accounts. But then there's this whole other sector, the self-directed IRA, which a lot of people don't know about, and it's not really talked about, especially by your financial advisors, because they're really not paid to discuss alternatives with you. They are paid to get you invested in their suite of products. So today, as we talk about self-directed IRAs, just keep that in mind. I did get asked a couple days ago if they were legal, and yes, self-directed IRAs are absolutely legal. So let's take a look at the term self-directed overall, what it means. So that means you as the individual investor and the account owner have complete control over your retirement account, right? You're the one going to make all of the decisions when it comes to investing, and you are going to do all of the due diligence behind the investments that you're going to make. So that's super important to remember there. All right. What's happening here? Oh, there we go. All right, so the benefits of a self-directed IRA. So diversification, you hear that term, don't put all of your eggs in one basket. That's what we try and educate our clients about, is diversification, making sure you spread the wealth through alternatives and publicly traded investments. We specialize in the alternative side of things. We're not licensed for the publicly traded, just like those big box custodians are not licensed to talk about alternatives, the privately held investments, things like real estate, private placement investments, precious metals, digital currency, anything that we consider alternative and not publicly traded. So diversification is key, and that kind of opens up the doors to these other 3 points on the screen here. So there are tax advantages, obviously, to having an IRA in general. You have pre-tax and post-tax benefits, earning that income within the IRA. Obviously, with diversification and alternative investments, you open that door to making a higher ROI, return on your investment. And when you're thinking about retirement accounts, asset protection, it does have inherent asset protection within that retirement vehicle. And then you're building your wealth for your beneficiaries. Some of you might have already inherited an account at some point from someone in your life, maybe a parent, a spouse, and you might have that inherited IRA. And you can use those in the self-directed world as well. So those are some of your key advantages to having a self-directed IRA. All right, oops. Going in the wrong direction. There we go. Right. So what are some of the things that you're looking at when you're thinking about pairing with a custodian and opening an account? And so again, you've probably heard and seen commercials. I know I see commercials all the time for Edward Jones, but how do you know about the company that you're going to work with, especially in the self-directed world? There are a lot of us out there, and we're regulated a little bit differently, especially when it comes to state level. So there are some things when you're looking at a company you want to work with that you want to think about. first and foremost is the reputation of the company. And that kind of comes along with how we're regulated. So as a custodian, we are licensed to custody alternative investments. We are a retail trust company. So we are regulated by the IRS at the federal level and the Financial Institutions Division of the state of Nevada at the state level. And they work very closely, federal and state, to make sure that we are adhering to all of the IRS rules and regulations. We are examined twice a year, once by our regulators at the Nevada FID, and then once by our third-party independent accounting company. So we have high regulations there. So looking at the reputation of the company and seeing how they're regulated, what state were they formed in, and what are the regulations behind that state is super important. Also, what investment options there are out there. A lot of custodians, we all kind of work differently in what we offer as far as investments go. There are some custodians that don't offer digital asset and digital currency investments. There are some that don't offer foreign investments. So you want to kind of dig down and ask the questions, especially if you know what it is that you would like to invest in. And also the security measures behind the company, the insurance. Are they FDIC insured in cash when your money is sitting in cash before it's invested? Take a look at all of those levels of insurance when it comes to the company. And how are they? Do they provide educational resources? How is their customer service? Give them a call. Are you waiting on hold for hours? Are they answering your call right away? Are they responding to your emails? These are all things that you really want to consider when you're looking at a custodian. There we go. All right, a little bit about Preferred Trust. We were founded in 2007. Like I mentioned, we are licensed, regulated, and audited. And we actually facilitate the role of both custodian and administrator, meaning we don't have any relationships with any administrators. We take care of the admin side of things and all of the paperwork all ourselves. So we are not divvying out the work to anyone. So be careful with that too. Administrators aren't always, they tout themselves as an IRA company, but they're not always regulated or licensed to provide those services. And actually, this number is actually I was proud to see this number go up. We're actually at $3.7 billion in alternative assets. So since we put this presentation together, it's raised this. Quite a lot of alternative assets under our custody. That's a little bit about Preferred. And this is a little bit about how we work. So one of the things that I think is key to knowing about a self-directed custodian and alternative assets is that we are not licensed to give advice. So different from TD Ameritrade and Edward Jones and Charles Schwab, they give financial advice because that's what they're licensed to do. This in the self-directed world is you're picking your investments. So we're not going to pick your investments for you. What our role is to provide you education on what is allowable in terms of what the IRS says is allowed, investments that are allowed versus not. We're going to tell you about different types of transactions that are allowable and not. We're going to make sure that you're keeping your IRA safe and that you're not doing anything to disqualify the IRA. So that's our job. And it's our job to kind of guide you through the process to let you know, once you tell us what investment that you're interested in, let you know the documentation that is needed for the investment, and then to provide that fast and efficient processing. One of the reasons that Preferred Trust came to be years ago, the owners, they also owned a real estate investment company, and they just couldn't get the deals funded quick enough. So they came together and decided that they also provide the custodial end of things. So we realize and know how fast, efficient processing makes it better for you as the investor. Downtime, if your investment's not being funded, you're losing out on potential income. So those are the things that we really do and we pride ourselves in. So the different types of self-directed IRAs, people are always confused. We get this question a lot. People always say, well, I want to open a real estate IRA or a precious metals IRA. Really, there's not a real estate IRA. There's not a precious metals IRA. The government says, the IRS says there are 4 types of retirement accounts. There's a traditional IRA, there's a Roth IRA, there's simple IRAs, and there's Sept IRAs. For our purposes today, we're going to kind of concentrate on Roth and traditional. That's what most people have and most people start out with. If you've had a former 401k, then you've probably at some point rolled it over and transitioned it into a traditional IRA. The Simple and Sept, if you want more details on those type of IRAs, we can absolutely help you with those. Those are more for your small business owners, those type of accounts. So for purposes of today, we're really going to focus on the traditional and the Roth. So remember, traditional IRAs are your pre-tax accounts, while Roth IRAs are your after-tax accounts. And transfers happen like to like, but there's also the opportunity to convert a traditional IRA to a Roth if you're interested in that. So those are your IRA types. And Roth obviously is the most attractive. So if you think about a Roth IRA, a lot of the contribution limits that are allowable are based on your modified adjusted gross income. So we always recommend to our clients that if they want to open a Roth account and start a brand new account, that they make sure they're getting some advice from a financial advisor or a CPA, someone that can let them know if they are eligible to make contributions and what their limits would be based on their income. But a Roth account is a great way to get started if you've never had an IRA before, never had a retirement account before, or you want to add additional funds to your current retirement account. So alternative investment options, what do our clients invest in? Obviously, like I mentioned earlier, we're not licensed to custody publicly held investments, but the private investments are what we specialize in. So Connect Invest is a type of real estate investment, and that's one of the alternatives that you can place and hold in your IRA with preferred trust. Precious metals is another one. Digital currency, as well as natural resources, startup companies, most anything and everything you can think of. There are very few things that the IRS says you cannot invest in. One of them is collectibles. They say you cannot invest in things like artwork. You can't invest in collectible coins. You can't invest in alcohol, stuff like that. The other one is life insurance policies. So very strict about how those are invested in. And then S Corps. You can't buy stock into S Corps. Otherwise, everything else is pretty much open. And we have a lot of investors that get really creative in what they want to invest in. And real estate is a huge part of their investment strategy. So today, Mason's going to come on and talk to you a little bit more about Connect Invest and how you can invest and then using it with your self-directed IRA. Investment sponsors. So that is what Connect Invest is to Preferred Trust. They are an investment sponsor that our clients utilize to make those real estate type of investments. And so just like you have to do your due diligence on the custodial company you work with, you also want to do your due diligence when it comes to the investment sponsor. Some of the things that you want to look at, first and foremost, I think, is their track record and experience. Right. So you want to look at the company behind the investments that are being offered. You want to find out what type of entity they are. Are they an LLC? Are they a corporation? And then figure out what state they're licensed in and go to the Secretary of State website and take a look. Are they in good standing? Kind of look at the background of the company. And then you want to know their investment strategies. So this may just be picking up the phone and having a conversation with one of their representatives, looking at their website. How detailed is their website? What information are they disclosing? And knowing what type of risk management they use to provide the investments to their clients. So these are all type of things, and an exit strategy outside of the investment. Like, how long will your funds be invested? Can they become liquid at any time you need them? These are important things that you need to look at and think about when you are researching your investment sponsors. The cost of an IRA. So we always get talked to about, well, my current IRA is free. There is no account out there that is actually free, but we make our money a little bit different than your typical standard big box custodians. While they're making money off of your investment and the income that you make from your investment, because they're licensed to, we actually cannot do that. So any income derived from the investments that you make goes back into your IRA and it's 100% yours. We are not taking any of that money to Preferred Trust. We actually make our money on the transactional fees that we provide for the services of processing your investment. We get an annual fee to administer your IRA. So that means reporting to the IRS, And so a little bit different than your typical standard custodians. So our fee schedule is public knowledge. It's out on our website. It's part of our application process. There are no hidden fees. We're pretty straightforward. And because Connect Invest is a crowdfunding investment, we have a slightly modified fee schedule for them. And so there's a little bit lower fees involved with that, which is nice. So with our IRA admin fee, like what do you get with Preferred Trust? Obviously, we're going to process the investments that you ask us to process, but we also do your annual tax reporting to the IRS. We also provide annual statement packages for you. You get access to our online portal 24 hours a day, 7 days a week, so you can review your transaction history, you can see your holdings, you can get all types of forms from your portal. You can get email and phone support and education. Everything happens through our portal. So we're providing those services to you. And I guarantee we will answer the phone when you call. So what's the process? Now you're ready to get going. You think you want to make an investment. Where do you get started? So we have online applications that make it a very seamless process to open the account. So you want to get on the, we'll provide you some links, but you want to go ahead and get on our website and look for that application and fill out the application. And then we're going to work with you. Our team is going to call you and find out exactly how you're funding your account. Will this be a transfer from another IRA? Will it be a rollover from a different retirement account, maybe a 401k or a pension plan? Or are you going to be contributing? Or maybe you have all three. Lots of people have multiple sources of income coming into their retirement account. So you can absolutely do a multitude of things. So we're going to work with you to kind of find that out. And then we're going to help you initiate the transfer of those funds from wherever they currently are to fund your account with Preferred Trust. You select the investment and we process it for you. And then you get to get on your portal and watch you receive income. So it's pretty cool. It's a pretty quick process. Like I said, we really work efficiently and we want to get you invested in earning income for your retirement as quickly as possible. So those 4 steps make it very easy. So this is how to get started. You can use our QR code if you'd like. You can go to our website, preferredtrustcompany.com. But if you scan that, it'll go straight to a web page that you can use to schedule a consult with one of our qualified IRA experts. Just put in your contact information and a good time that works for you, and one of our representatives will give you a call to get started. We'll go over the whole process with you, answer any questions you have about IRAs in general, anything about IRS rules and regulations, about Preferred Trust, anything you can think of, we're there to help you all the way through. Okay, let's see. Okay, so Mason's going to come up next, and he's going to talk to you a little bit about the investment side of things and how that works with a self-directed IRA.
All right, so we're going to talk about real estate and Connect Invest. Preferred Trust, great custodian, have a great relationship with them. So if you guys have any questions specifically for them, like I said, we will open up that Q&A at the end. Okay, so one of the things I want to talk about here is one of the real estate investing advantages. So when you are planning for a comfortable retirement, real estate does provide a reliable path for your financial goals and helping you build wealth for your golden years. And so one of the things with real estate among Americans is it's consistently voted as the most popular long-term investment. Another thing as well is real estate is not as volatile as your traditional investment. So it's a great place to put a portion of your funds for some stable passive income because it is easy to generate passive income. And what you can do through several different types or several different strategies is you can go direct to ownership, such as owning a rental property itself. You can go into mortgage investing. You can go into trust deed investing, or you can also go into short notes is what we offer at Connect Invest. And I will kind of dive into that a little more in a few slides for those who might not be familiar with Connect Invest and the whole process of what we do. But the thing that I personally like about real estate is majority of the time there is a collateral behind the investment itself. So some people consider it to be a low risk, high return investment. And so when I was kind of talking about ownership, if you were going directly into a rental property, traditionally you're going to yield, let's say 5 to 10% on your investment. But there's several different pros and cons with different real estate investments, such as when you do own a rental, one of the things that could happen is you could potentially miss out on income if you have a vacant tenant, or there's some unexpected expenses that could come out. Maybe an AC unit goes out, or AC unit goes out, so you have some other expense that you might not think. So there's a little more headache, and there's some more pros and cons depending on exactly what you go into. So if you are looking for something more of sit back, collect income, build wealth, real estate's a solid option, especially directly with short notes. And so it also is one of the most effective hedges against inflation. And there's several other things, but one of the things I want to focus on is more of real estate compared to volatility with your traditional investments. So this slide here, the top, you're going to see it's the S&P 500, and the one below it's actually the home index price. And so this is going to be from 2013 to 2023. And one of the things I want to touch on is if you look at the S&P for the last 10, 20 years, your average return is going to be anywhere from 7 to 9%, depending on if you account for inflation. I think the NASDAQ's right around 10. But one of the things that you might not drill down into is if you look at it on a year-to-year basis. There are some years that you could lose, let's say, 10 to 20% of your investment, and next year it could go up 10 to 20. And so as you see in this graph, the thing with real estate is it holds to be steady and consistent. People are always going to need houses to live in. Businesses are always going to need, buildings to work out of. That's never going to go away. But the stock and traditional investments does typically become more volatile than your typical real estate investment. And so this next slide, this is actually comparing stocks, bonds, and real estate itself. The one we're going to focus on here is the orange and light blue line. The orange is multifamily. This is from 2000 to 2021. The light blue is actually the home index as well. But as I was kind of mentioning in the last slide, that light gray, that S&P 500, you can see it has some years where it's down 10%, down 12, down 20, and other years where it could be up 20 to 25%. But as you're going into retirement, volatility is not necessarily your friend. You worked hard your entire life for these funds to be there. You want to enjoy them when you go into retirement. So you might not want the volatility that you did several years ago. And as you can see here with real estate, is it holds to be steady and true with your return throughout the years, and has shown that through the years. So now you might ask, what is Connect Invest? So Connect Invest was actually created a couple years ago. The owner's been doing real estate for over 30 years, and he wanted to make a product that was fixed income, that was providing diversification for people, that was collateralized by real estate itself, that offered fixed returns. And so he created Connect Invest more as a test. What can we do to have that for investors out there? And so in 2021, the offering was qualified by the SEC to start selling notes. And we structured it this specific way. So we have 3 different notes shown here. There's a 6-month note at 7.5% annualized rate of return. There's a 12-month note at 8% annualized rate of return, and a 24-month note annualized rate of return. So depending on what you're looking for and what aligns with your investment strategies, is you're able to select 6, 12, or 24 and get an exact payoff date when the funds are going to go back to you, and you're going to have a fixed rate throughout your entire duration of the investment. So how does short notes work? And this is a little slide. This is kind of brief, but what we did was we created a platform that allows people to sign up and create an account. You can do this through cash. You can do this through retirement account, such as if you have a self-directed IRA with preferred trust, or you can also open up an LLC account for businesses. But what you do is you go through, you create an account. We have to verify all identities regardless of the investment type, just for compliance purposes. But investors such as yourself go through and they purchase a note. Like I said, you can select 6 months, 12 months, 24. Then from there, the proceeds go to Connect Invest for us to manage. Almost think of it as a mutual fund, specifically in real estate debt. And so we use the proceeds and we invest into first position collateralized loans. Everything we invest into is collateralized at about 70% loan to cost. And it's spread across, or it's diversified across residential loans and commercial loans. And we can drill down deeper on that as well in the next slide. But from there, the proceeds or the interest earned from the loans that we invest in is derived and paid back to our short note holders. So it's a very simple process of how we've set this up to help provide stable passive income for people that want to get into real estate that maybe not have been available to them previously and make it more accessible. And so here's some of the benefits. Like I said, with diversification, we're investing in the first position. Everything is either commercial or residential, and it can be in the acquisition phase, development phase, construction phase. The portfolio itself is also diversified across several different borrowers, states. So we're drilling down and diversifying the funds as much as possible to minimize the risk. Because one of the questions we get a lot is, what is the risk, right? The risk actually lies between you as the investor and the company. We use the money and to minimize the risk, invest and drill down into several different loans to create this massive portfolio of all these loans. And so it does minimize that risk for the company to provide that stable return. Next is the interest is paid every month. So the interest on your investment is paid directly back to your account. If you have a retirement account, the funds are sent directly back to the custodian on a month-by-month basis. And then upon maturity, that principal with your last interest payment is paid. But the interest that is paid every month is fixed, so it is reliable, and you are able to predict what income you are going to get to help supplement some of that. Also, short-term investment periods. Again, depending on what you're looking for your investments, is you can go into 6, 12, 24. You're going to have a defined maturity date for exactly when the principal is going to get paid back. And next, streamlining the investment process. That was the whole kind of idea with Connect Invest, is how do you evolve with technology for real estate investing? And so that's what we've kind of done is made a platform where you're able to do absolutely everything. You don't even necessarily have to talk to one of us if you don't want to, and go through, make your investments, and make it so accessible because of the fact that you are able to enter at a $500 minimum, and you're also not needing to be accredited. So those are a few big steps that we were able to do with the Connect Invest offering to make real estate investing more accessible to the everyday person. So enhancing your retirement strategy with Connect Invest or with short notes. So Connect Invest short notes can help you reach your retirement goals. It allows you to diversify your investment portfolio beyond traditional investments. If you're looking for stable passive income, it's a great play to put a portion of your investment portfolio. Helps increase stability and boost your returns. Also, with the interest distributions that are paid every month, it can help your portfolio hedge against inflation. And then specifically, if you are in retirement accounts, the gains that you earn are more tax efficient to even accumulate more wealth for you. And so with that said, we're going to open up for Q&A, and I will get Chris back in here shortly. For any questions you guys have, feel free to ask. And so one question we have here is, can you buy Connect Invest stocks? Connect Invest is not a stock product. It's actually a debt note. Think of it almost like buying a CD from a bank. It functions the same exact way. But do you press answer live? Oh, sorry. Maybe not. One of the questions that came in is, how does Connect Invest earn money? So the loans that we invest into have a higher interest rate than the spread that we pay out. And that's just due to cash reserves and how we're able to earn money to stay afloat as a company. Another came in, as the Fed drops interest rates, how will this impact your offering? So the loan company that we invest into the loans that service and originates them, they haven't fluctuated their rates for the last decade. And so they're going to hold true, I believe, for the next several years. We're not going to fluctuate the rates on the notes. So the rates on the notes, if we would even do it, we'd have to make an amendment, which we would disclose to all the investors prior. But you're locked in at that rate for the duration of your investment. But short answer, we are not in the foreseeable future going to fluctuate the rates on the notes.
All right, so let's see. Here's one about IRAs. Can you have more than one custodian company? The answer is yes, absolutely. So we have a lot of clients that ask us, Do I have to transfer all of my funds from my current IRA over to preferred trust to invest? And the answer is no. You can continue to have an IRA. Let's say you have one at TD Ameritrade and you want to open one for alternatives at preferred trust. You absolutely can do that. The only limitation is on what you can contribute to the IRA annually across all IRA accounts. So if you have multiple IRAs, your contribution annually will be capped. However, the amount of income you can earn is not, so that you can keep investing in stocks, bonds, and mutual funds in your big box custodian account. And then you can have your alternative investments at a custodian like Preferred Trust and be earning income that way. So you can have more than one. Let's see. All right. Is the IRA subject to RMDs? Yes, the IRA, just like your traditional IRAs at the big box companies, traditional IRAs, no matter where they are or what they're investing in, are going to be subject to RMDs. The IRS has increased the age of RMDs over the last couple of years. So now you must take an RMD, required minimum distribution, from a traditional account when you reach the age of 73. And it is going to increase to the age of 75 in the year 2035. So we've got a little bit of time before it increases again. Yes, you are required to take those distributions. Okay, here's another one. How do I roll over my 401k into a Connect Invest account? Okay, so if you have a 401k where you're currently employed, that gets, it's a little bit more difficult because that really depends on your employer. You will have to speak with them and find out if they let you use those funds and roll them over while you're still employed. A lot of companies mandate that you have to wait until separation of employment happens. So that can be a little bit tricky, but it's worth the ask. For anyone that has an old 401k that they no longer have it or no longer employed with that company anymore, you can absolutely roll that over. You would roll it over to a traditional IRA. For taxable purposes, a 401k matches with a traditional IRA. So you would roll that over and open that traditional IRA with Preferred Trust. And once the account is open, then you can make the investment with Connect Invest. We work very closely with Connect Invest, like Mason mentioned earlier. So we will help you fund that investment with them. It's very, very easy. We make the transaction simple for you. We provide you all of the investment documents, and then you give us the authorization to send funds to Connect Invest to make that investment. So it's very, very easy. Let's see. I have a Charles Schwab IRA. Can I use funds from there to invest in Connect Invest? Do I have to sell my current holdings first? So if you have your account at Charles Schwab, so Charles Schwab specializes in their suite of products. You can't invest directly through your IRA with them into Connect Invest. You would have to use funds from your IRA at Charles Schwab and transfer them into an IRA with a self-directed IRA custodian like Preferred Trust to be able to make the investment. But you don't have to move all of your funds. You can keep a portion of them at Charles Schwab. You would liquidate whatever portion of funds that you want to at Charles Schwab, and it comes to Preferred Trust in cash. Again, we're not licensed to hold publicly traded assets, so we can't liquidate them. They have to be done on the Charles Schwab side. Once the cash is available, we can transfer those over to the IRA with Preferred Trust to make that investment.
And one thing too is Connect Invest is not a custodian, we're just an investment product. So you do have to use a custodian if you want to use a self-directed IRA to invest into our products.
Correct. And that leads us kind of into the next question. Can we have multiple self-directed IRAs from multiple custodians? Yes, you can have more than one self-directed IRA for sure. Obviously, there's two sets of fees, and and a lot of times people will ask us, well, you know, I'd like to have real estate in my IRA, my self-directed IRA, and I'd also like to have some precious metals, and I'd like to have some digital currency. Do I need 3 separate IRAs for that? And the answer is no. So your IRA at Preferred Trust Company can hold all of the alternative investments at the same time. So you can have an investment with Connect Invest, you can invest in digital currency, you can buy some gold. So it can all be together in one account. What is the minimum you suggest for a self-directed if personally funding. So we can't give any suggestions on what to put in there. Obviously, I think Mason mentioned that the barrier to entry is 500, right, to make an investment. So, I mean, you can make an investment as little as 500. And then you just need to look at your contribution limits as far as what can you maximize and personally put into an IRA. Into a traditional and a Roth, it's 7,000. But you do have the option of of also taking that and spreading it across multiple IRAs. So you kind of have to really determine what your end goal is and how much you want to put into the IRA.
Yeah, and one other thing is we have a couple custodians we work with, but Preferred Trust for our investment has by far the best fee schedule. So you want to make sure you look at the fee schedule when invest, because for 500, what you're going to get is probably not going to cover that. So just make sure that you look at the fee schedule. But their fee schedule for crowdfunding is by far the best and most competitive I've seen. So definitely take a look at those when you're looking for something.
Okay, how do I roll over my 401k into, I think we answered that one. Will it accumulate in the IRA or do I have to take out the profit? No, it will accumulate in the IRA. Obviously, IRA is made to be saving for retirement. And so the purpose is to keep it in there long term. Obviously, the IRS says that if you do need the funds for personal reasons, you can take a distribution of the funds. It is taxable, and depending on your age, you can also be penalized when you take it out. But the whole purpose is to leave it in and watch it grow, and then use the amounts of funds that you derive, the income that you derive, to reinvest or make other investments. You're not required to take it out until you reach the age of 73. Let's see. Once it's rolled over, then can I invest in bonds and then the profit will be held there or reinvested? So in a all self-directed custodians are only licensed to hold alternative investments. So anything publicly traded, like a bond, you can't invest in when you're at Preferred Trust. So we suggest if you want to do both, then you leave some funds at your big box custodian and transfer a small amount or whatever amount you'd like to into a self-directed IRA to then make investments on the alternative side of things. You can take whatever income that you derive from your alternatives and you can transfer them back to your big box account to continue to invest in publicly traded. That's not a problem, but we don't specialize in that. We're not licensed to do that. Okay, I may have asked the wrong question. I have a stock that I purchased on my own. I put $3 per month. How do I take that money out and roll it? Do I have to take it out first? Put it into Connect Invest. I guess we probably need a little bit more detail because is it a personal account or is it a retirement account?
Yeah, if it's a cash account, you just have to liquidate it, open up a Connect Invest account and put the capital in.
Yeah.
If it's a retirement account, okay, personal, yeah, you just need to sell it, get cash, open up a Connect Invest account, and then link your account, and then you transfer the funds in.
Are we able to make transactions with mobile apps? Are we able to make transactions with mobile apps with both companies? Preferred Trust Company does have a mobile app, and we do have all of our documents are electronic. So yes, we can do that for you. Connect Invest?
Oh yeah, we have an app coming out. Sorry, we have an app coming out at the end of the month actually, and so we will send emails out to everyone. So that'll.
Okay, I think we have some more. We have a few more questions, I think.
Yeah.
Where are they? There we go. Oh. Are the returns for my Connect Invest considered contributions into my self-directed IRA? No, they're not considered contributions. This is income earned from your investments. Just like when you invest in a stock in your TD Ameritrade account and the income comes back into your IRA with them, it's the same concept. So anything earned with Connect Invest is going to come back into your IRA with Preferred Trust Company. It is not considered a contribution, so there are no limitations on the amount that you can earn. Yes, you can do both. So you can have a note with Connect Invest from a personal standpoint. And you can also have notes with your self-directed IRA. You can have both. You can invest in both ways. And most clients start out as cash investors, I think, and then open up a self-directed IRA. They have success with their cash investments, and then they find that secondary avenue to generate income through that self-directed IRA.
Yeah, especially on the cash side, if you have, funds sitting in a money market, bond, savings account earning 4 or 5%, you can simply take that cash, put it into a note, and get anywhere from 7.5. So just basically increasing the income you're going to receive, just to help, everyone wants more money, everyone wants more income. So it's a great way to just increase that.
Okay, do we have any more? Is that the?
I think that wraps it up. And if you guys have any other questions, feel free to reach out to us. And then
we have one more slide that we'd like to show you today. Okay, so we are offering, Preferred Trust Company is offering to waive the application establishment fee, the account establishment fee of $50. If you get your account application into us by September 30th, so today's the 12th, so you've got some time to the end of the month. Again, get your application in and we'll waive that $50 account establishment fee. You can find our applications on our website. Up in the corner there, you will see our Preferred Trust Company partnership page with Connect Invest that you can select on to get started. You can talk to a representative, or if you're ready to get going, you can just fill out the application. And then there's some information for Connect Invest on there.
Yeah, if you guys have any questions further on Connect Invest, the project itself, any of that, feel free to reach out to us. You can go to connectinvest.com, or you can also call the numbers, send the email. We have great staff will be able to answer it. And then you got one more question.
One more question. If I transfer $150,000, what are the fees for Preferred Trust per year? Great question. So as I mentioned earlier, we have a special crowdfunding fee schedule for Connect Invest. So it's $200, excuse me, $200 annually for the fee for an account with Preferred. I think maybe that's it.
But awesome, links.
Oh, links in the chat. Can we put those links? Can someone put those links in the chat?
Yeah. And then also we will send out this recording to everyone as well. So if you did have to jump off or you're still here, we'll get this out to you guys. And like we said, if you have any questions, reach out to any of us. We'll be happy to get you going. And
there's the link. All right. Yeah, I think that's it.
Awesome.
Thanks,
well, thank you guys for joining the webinar. Hopefully you guys learned something beneficial. And hopefully you get some accounts open up Preferred Trust, and then open up a Connect Invest account as well.
Yeah. Thank you all. We appreciate you joining us.